Guys, this is Adam from dodjit.com and this is your video market briefing for Wednesday the 18th of March 2009. Now what I'm going to do in this video is I'm going to try to focus on technical analysis more than the fundamental side of things. Yesterday, interest rate decision in the US. The Fed decided to leave their interest rates at their current level of 0 to 0.25%. Well, basically they haven't got really anywhere to lower their interest rates. What they did state, in addition to the interest rate decision, is that they intend to buy government bonds. And what basically happened is that the markets soared. They soared higher. They reached their highs of their day. They didn't manage to continue with the momentum after the first couple of minutes of the interest rate decision, but they did manage to close the day in positive territory, as we can see here on the S&P 500. This is the SPY, the spider chart. We can see that it closed 2.24% higher. Now, in our previous video, what we were talking about this previous support level that will probably act as a resistance level, and what we did state, we did the video roughly around here, and we did state that this will probably act as a magnet, and it really did act as a magnet. What I am looking though at is that we did receive a lot of volume on the markets yesterday, and things do look like they're starting to improve a little bit. I think we're going to be stuck in this range if we don't break today higher, so then we're going to probably be stuck in this range pattern. We're probably going to use our prior lows as our support. We've got a little bit of clutter around here as well. We might get stuck, we might pause a little bit around this level. Obviously we're going to have to see how momentum holds up today, and if the markets, if the US stock markets manage to just continue breaking resistance and they continue forward. Now, the next chart what I want to bring up, like I said in this video, I'm going to just flip over a few charts. The next one is the financial sector. Now, the financials really showed some positive signs yesterday. We did have this rally. I was expecting it to be a little bit overbought, and I was expecting a slight correction, but you know, with all the momentum in the markets yesterday, it just raced forward. Now, look at this. It broke its 50-day moving average, which is also a really good sign. We got high volume on this. Things look to be like they're turning slightly around. I wouldn't class this as a bull market, completely not. At the moment we're looking for a bear market rally, and then obviously once we get this rally, we finish this rally, momentum starts to wear off. We're going to just have to analyze the markets again and see where we stand and take it from there. Now, the next chart that I want to bring up is gold. Now, on our previous videos, what we have been doing, we've been talking a lot about gold. We've been talking about a few different possibilities, different scenarios that we've been looking at. Check out what happened yesterday. Look at this volume on gold. This is a trust fund that tracks the gold prices. It's GLD. Look at this. This is amazing. Look at this candlestick. It completely bounced off its 50-day moving average, soared higher, but found in the end to really maintain a nice break above this resistance level. We were talking about this resistance level in our previous chart. We were talking about these two levels roughly around here, and this trend line that comes up roughly around there. So even though this does look very, very positive for gold, I am still waiting for a clear break of this level. I don't want to be caught out on a fake out. So I'm waiting for a clear break of this level. Obviously, if we're going to head higher, then our first target is going to be the 1,000 mark. That is also going to be a very, very psychological level, so you've got to take that into consideration. But this is a nice setup. It looks to be setting up nicely. I do want to see a follow through beforehand though. Now, the next chart that I've brought up, I've flipped over now to the Forex market. I just want to show you a few different things that we're now looking at. Basically, look at this candlestick. Look what happened yesterday. This soared higher. I'm talking about something like over 300 pips in under 5 minutes. This was amazing. Now, it was actually quite hard to catch this move. I don't think most people would have been able to catch this move unless you had already limits in your system, or you catch the second phase of the move going up. It was quite instant. where to look, where we're going now. Basically, we've now reached this clutter around here. We can see some clutter around this area. We can see also some clutter around this area. Now, I wouldn't enter long now, especially after this 1, 2, 3, 4, 5, 6, 7 day rally. I would wait for a pullback. I would wait for a pullback, a nice swing trade, and then if you're thinking of entering long euro, I would then enter. To enter now is a little bit problematic, especially after all the momentum. I would wait to see how things turn out. Again, that's my opinion. Obviously, every trader in his own strategy, but I would wait to see how this rally is going to turn out, or even to wait for a type of swing trade. I don't think we're going to receive something like we received in December, this massive rally going up here. I think what we might do is we might pull back slightly. If we're going to pull back, we're going to be thinking of entering this trade. That's it for the euro against the US dollar. The next chart that I just want to flip over to is the dollar against the Japanese yen. The dollar really lost its ground yesterday, and we're talking about the dollar losing ground on the overall market. So obviously also on this pair it lost ground. I still see this type of uptrend coming along here. I'm a little bit skeptical to say now we're entering this downtrend. We have got this support trend line coming up roughly around here where we could receive some support. We've also got major support around this level. It's a little bit hard to now start to say that we're going in this bearish trend, because what I'm looking at is more of a pullback at the moment. And what I'm going to do is I'm going to just test this pullback by just plotting my Fibonacci levels around this area, right, like that. And we can see that the Fibonacci levels, especially the 50% one, is actually in line with our support level. So what I am looking for it to drift down to one of these levels, and then we're going to just have to take it by ear, see how it works out, and see how it progresses. The final chart that I brought up is the US dollar against the Canadian dollar, and the reason why I brought this chart up is because number one, we broke this trend line coming up yesterday. We are heading lower. Now we've got a few targets on this chart. We've got one target that is roughly around here. And the reason why I'm bringing this chart up is because I want to state the following. Number one, the Canadian economy isn't in a good state. Not at all. So this is something we have to take into consideration, because even though we are receiving Canadian dollar strength, I'm not sure how long this is going to last. And if it doesn't really continue with the same amount of momentum that we received yesterday, then what could happen is that our positions, if anyone's taken positions on this trade, their positions could end up going into a type of consolidation pattern. So this is something that you've got to take into consideration. If you've got open positions on this pair, that the Canadian economy isn't doing that well, and what we could see is we could see some dollar strength or some consolidation. If you're targeting this level roughly around here, the 1.2123 level, so then I would keep an eye out just on this position, make sure that it's not going to head back in the other direction, and also take it by ear. Hope you enjoyed the video. My name is Adam from dodjit.com.